So thank you for joining to everybody to this webinar focused on the business opportunities in the United Arab Emirates. My name is Luca Ronchetti. I represent Deco Group. Deco is a multifamily office, Swiss multifamily office based in Switzerland. We offer advisory and fiduciary services, asset management and protection services, M&A and corporate finance solutions, risk management, insurance, real estate, and digital services. So basically, we serve entrepreneurs from Switzerland, companies, and families as well. We are based in Lugano, so for those who do not know where we are, so it's the south part of Switzerland, very close to the Italian border. And we support our clients from here to benefit of the advantages of Switzerland as a hub for local and international business. Our second headquarters is in the United Arab Emirates, in Dubai and Abu Dhabi, where we are based under the brand of Swiss. Why Swiss? Because historically, we are there with Swiss management, with Swiss approach, and we are very good net link with the Swiss network as well. And those we serve clients, companies in particular, as a hub like Switzerland for corporate, legal, and management consulting. So today, let me pass the word to Mr. Michael Lane, who is Managing Director of Swiss Group, so the speaker of the webinar. Thank you, Michael, to help us to understand better which are the real opportunities in doing business in those markets. Before to leave the word to Michael, I tell you, if you want to do some questions, so to write some questions, you can use the chat directly on the platform. And then at the end of Michael's presentation, we can answer to your question, or if you prefer, you can get in contact directly after the meeting with Michael and explore any kind of opportunities or any information you would need. So Michael, the floor is yours. Thank you, and have a nice day.
Thank you, Luca, for your introduction. Good evening, everyone here from sunny and warm Dubai. What do I want to talk about in this 45 minutes to an hour? I want to introduce you to the business opportunities here in the UAE. The agenda for today's webinar is a short few words about Swiss Group, our company here in the UAE. A few words about the United Arab Emirates, because the UAE is a bit more than just Dubai. Then what are the options if you're interested in setting up business here in the UAE, meaning a local entity, having power here on the ground. Then a few words about the economic substance. This is the new worldwide standard. I call it the new normal. Here, what are the implications also for the UAE? Some additional considerations such as taxation, immigration, and last but not least, also a few words on inheritance. We all know this is an Arab country under the Sharia principles, so this is always a bit an issue. So here I want to say a few words about inheritance matters, also how assets here in the UAE can be protected from clients abroad. Why the UAE? A short pitch, why the UAE can be interesting to you or to your clients, and then a few words and outlook on the future. So I start, what is Swiss Group? Swiss Group is basically two entities here in the UAE. We have the headquarters Swiss ILC Services DMCC, our service provider here in Dubai, where we offer a wide range of advisory, management, and commercial services to help our clients here setting up here. This is a one-stop shop. As you can see, we also have an accounting department who takes care of accounting with an external auditor and VAT matters. In Abu Dhabi, we have our law firm where we offer fiduciary and tax planning services, estate planning when it's about inheritance, also registering wills here for non-Muslims, general legal advice and consultancy for corporate and individual clients. So this is just a few words how we set up here in the UAE. Now, what are the United Arab Emirates? Here, as I said before, the UAE is a bit more than just Dubai and Abu Dhabi. You can see the United Arab Emirates are, in fact, is a federation of 7 emirates, with Abu Dhabi, where it's also the capital here, Ajman, Dubai, then the lesser known Fujairah, Saqema, Sharjah, and Al Kuwait. Here, currently, roughly about 10 million residents, of which are 90% are foreigners. This can be low-cost salaries, mostly from Southeast Asia, Bangladesh, the Philippines, but also high net worth people from India, from Europe, from the United States. So it's a big melting pot of foreign nationals here in the UAE. The UAE is a business and trade and financial hub for the MENA region, the subcontinent, and Central Asia. We see more and more Chinese companies having their regional hubs here to conquer the African market. You can see in the last bullet point from here, within 4 to 5 flight hours, you can reach about 2 billion people. So this is the perfect setup if you think about doing business in the MENA region, in India or Central Asia. The UAE is also the 3rd largest exporter worldwide after Hong Kong and Singapore. These just a few words about what are the UAE. The legal system here in the UAE, basically the system for the country is based on civil law. Napoleon originally, he came all the way to Egypt, which then influenced the region here. So the civil code here applicable is not that much different than the one we have, for example, in France and Switzerland. Of course, the order public here, the prevailing public policy and order is here influenced by the Islamic Sharia law. But in fact here, the civil code is applicable, so it's a civil law jurisdiction. Then you see we have the DIFC and the ADGM. These are the 2 financial free zones here in the UAE. DIFC based in Dubai, which has its own jurisdiction and its own court. The same is applicable to the ADGM, the financial free zone in Abu Dhabi, which again has its own courts and its own jurisdictions. When I say they have their own jurisdiction, these 2 jurisdictions are based on the common law and refer directly to the laws of England and Wales. So here you see the UAE, you have a mix of applicable laws of different legal systems, in generally speaking civil law, and the financial free zones with their own courts based on the common law. When we think about setting up here in the UAE, as a general principle here in the Gulf region, foreign ownership of companies is in principle not allowed. So generally speaking, when we consider the GCC, this is from Kuwait, Bahrain, Saudi, the UAE, in principle, like the ownership by foreigners of local companies is not allowed. So, however, there are exceptions, which I will follow up shortly. We have basically 3 types of companies which can be established here in the UAE. We can establish a local mainland company. When I talk about the mainland company, that means in the UAE, but of a free zone. Then you have the option to open a company in one of the various free zones onshore. And then you also have the option in 3 different free zones to open up a company offshore. When I talk about offshore, then we know the more traditional offshore centers like BVI, Cayman, or the Seychelles. So here, the principle of such an offshore structure can be compared with those jurisdictions. When we talk about a local company, a mainland company, here again, you are not allowed as a foreigner to open and own such a mainland company when you do business outside the free zones. You can see you need to have a local partner, an Emirati, which holds at least 51% of the shares in that company. Having said that, you see it under the notes, of course, like the lawyers, they have had various ways in the past how you can make it happen that the foreigner still can own more than the 49%. There were side agreements, trust agreements, nominee agreements. But if such agreement is taken to court, again, I wrote the company law now has been amended, explicitly forbids any such agreement. So again, mainland companies currently can only be owned up to 49% by foreigners. This is a general principle. Lately, at the end of last year, this commercial code has, however, been amended. So on federal level, this 51% mandatory threshold for the local partner has been lifted. And now from federal level, it has been delegated down to the Emirate level. So each of the seven Emirates has its own government. So now it's up to them to decide how much involvement is requested, mandatorily requested from a local Emirati partner. I wrote here the small print is still outstanding. As a lawyer, I always say we look at the situation once the laws are out and have been communicated. So for now, there's only a lift on federal level, and we wait now for the sub-laws, the delegated laws now from the Emirates in order to see and assess how the future will look now for local mainland companies. Another option, as I said before, is a free zone company. You can see since 1985, there are about 40 different free zones now in the UAE. Most of these free zones are branch specific, industry specific. You can see some examples. For example, Dubai Healthcare City. There is a Dubai Airport free zone. There is Dubai Internet City. Dubai Internet City is connected to Dubai Media City, where you have the big international media conglomerates like Bloomberg, CNN, and those kind of companies are here. Then you have the Dubai International Finance Center together with the Abu Dhabi Global Market. Again, these are the two financial free zones with their own jurisdiction. And then last but not least, you have, of course, in the other of the seven Emirates, like in Ajman, also different free zones. Here you see under the notes, a free zone company can be held 100% in foreign ownership. You have full repatriation of capital and profits without any restriction. So if you come from abroad and you intend to set up here in the UAE, then if you want to hold 100% of your company, then right now it's only possible to do so in one of the various free zones. Again, the local market then is protected. So if you want to do business from the free zone into mainland, you're still obliged to have a local partner who helps you, a local agent or a distributor who helps you to serve the mainland. So you can have a company in the free zone, own that 100%, but if you want to serve the mainland to be basically on the same level as a mainland company, you still have to work together with a local partner, a local company. You can see as an onshore company in a free zone, physical presence is required. There can be flexi or smart desk option in one of the various business centers, where you basically rent a desk in a business center, which you can use maybe 5 to 10 hours a week. This is the lowest physical presence you can have. It goes up to designated desk, to, of course, then to full office, warehouse or retail space, depending on the activity of your company. So again, the difference between a mainland company and the free zone company is basically in the rate of ownership. A free zone company 100%, while currently a mainland company only up to 49% in foreign ownership. As a third option, the UAE, compared to other traditional offshore jurisdictions like Cayman, BVI, Jersey, or the Seychelles, you also have the option to set up an offshore entity here. Currently, 3 free zones offer such establishment. Jebel Ali, this is the one is around, I think, also since 1985, one of the oldest free zones here in the UAE, and also the most known when we talk about offshore centers here in the UAE abroad. Ras Al Khaimah, the second big offshore center, RAK ICC, RAK International Company Center. This has also attracted a lot of clients lately and is more and more also known to banks or regulators or authorities abroad. Then the smallest option, the smallest free zone offering such offshore structures is Oman Free Zone. So you can see currently Jebel Ali based in Dubai, Ras Al Khaimah, Raqqa ICCs in Ras Al Khaimah, and Ajman in Ajman. So these are the only offshore centers you can establish. For example, Abu Dhabi does not offer any such structure. So here again, it's like it's a niche market right now. So the big market here in the UAE is of course the setup in the various free zones. You can see on the note, the physical presence in the UAE is neither necessary nor allowed. This of course has implication I will talk about a bit later when we talk about taxes and tax residency of a company. And the setup of these offshore structures is following the common law principles, again, as we know from the established offshore centers such as the BVI or Jersey. One big thing, this does not only affect the UAE, is of course the introduction of the economic substance requirement, economic substance being pushed of course from the European Union, the OECD, that the jurisdiction should not facilitate offshore structures aimed of attracting profits, which of course are then transferred into low or no tax jurisdictions. So in the end, what they want, you see it also with the BEPS, with the base erosion profit shifting standards established in 18, that mobile business should not park their profits in zero tax jurisdiction without actually having business functions and business activities in the same location. Again, this is of course the UAE with no tax jurisdiction is under focus, but again, this is not only here, this also attracts the BVI, the Cayman, all these islands, of course, where you have registered agents, an address with thousands of companies without really having economic substance at the same point. When we think, I always make the same example, when we take Starbucks, which made millions of turnover in the UK, and in fact did not pay any taxes in the UK because they had to pay licensing fees to a setup in one of the Channel Islands, where basically the profit from the operational entity in the UK then was transferred out into a no or low tax jurisdiction without having proper operations in that jurisdiction. So we have seen it all in the news, how this has been done in the past, under pressure now from the Europeans and the OECD. Now, companies, if they want to profit from any tax jurisdiction, they need to show that they've actually economic substance there. When we talk about economic substance, I call it the new normal. It's a global standard, not just here in the UAE. This standard now basically requires that such entity is actually directed and managed in the jurisdiction where you're seated and claim that you're tax resident or want to have the benefits. Then the core income generating activities must be conducted there. So if you're a consultancy and you send out an invoice to a group company in France and basically take out profits there, with this invoice, which you take the profits basically into a low tax jurisdiction, then the tax authorities or the authorities as such want to see who conduct this consultancy and from where. Adequacy test, again, you need to show that you have adequate numbers of full-time employees, you have adequate operational premises, such as like office. So if you send out invoices for consultancy or you claim dividends or whatever, one of the relevant activities, then they want to see that there are actually people there managing such entity, and they want to see where and who is conducting the relevant activity. So this again is not a UAE issue, but it's a worldwide new standard. So all low and no tax jurisdictions are affected by this. Again, the subsequent legislation, which has been enacted also here in the UAE, you can see it. The regulation then, however, remains on national level. And having said that, of course, the international standard when you do cross-border transaction or you want to profit from double tax treaty, then is a bit different. I'll make one example from a holding company. holding company business is considered as one of the 9 relevant activities under these economic substance regulations on the worldwide standard. Under the UAE local laws, it's sufficient that this holding company has a FlexiDesk business center solution and is managed here. So the manager, the director needs to be in the UAE, and you need to conduct board meetings here in the UAE. This would be sufficient so that the UAE authorities under the international regime would not transfer any information abroad. If this holding company here in the UAE, for example, has a French subsidiary and wants to profit from the double tax treaty and get some withholding tax back on the dividends paid by the French subsidiary, then the French authorities, they don't really care about the regulation here in the UAE, but they, for example, would then want to see the proper office space here in the UAE, and they want to see that the manager actually lives here, and the board meetings, etc., the managerial decisions from that holding company are taken here in the UAE. As an example, in Switzerland, the holding privilege has also been lifted. So also in Switzerland, it's just not enough anymore if you set up a holding company with a letterbox, with a law firm. Again, it's the same principle more and more. In order to profit from double tax treaty matters on the cross-border transaction, the authorities, the competent tax authorities want to see substance. So this is like the new normal, general global standard in economic substance. Why the UAE here can, of course, maybe has a better advantage than other jurisdiction is relatively easy. When I think of the Cayman Island or the BVI, island itself already says it, so it might be very limited on how you want to put such economic substance to an entity which is established in the BVI. So here, one option could be keeping the track record of the BVI company, which has been established years ago, keeping the bank account to move and migrate such entity to the UAE and put actually some substance on. So here again, I will talk about it a bit later. Here's just like for the way forward, economic substance, an issue now, a worldwide issue, not just the UAE, but it's targeting all the low and no cost jurisdiction. And again, I will follow up a bit later on why the UAE might be an attractive jurisdiction for entities which, let's just call it, struggle a bit with economic substance. When we talk about taxation here in the UAE, in principle, there are only 2 industries which are actually taxed here at the moment. These are foreign oil companies, branches of foreign banks. They have a corporate tax of 20%. When I say generally or theoretically, like all the Emirates have their own tax codes in place. However, they have been suspended for the time being. We know the UAE is a no tax jurisdiction. On top, the UAE free zones, they provide holidays, and basically they guarantee that up to 20 or 50 years that there will be no corporate taxation. So meaning that, like, even if the Emirate somewhere down the road thinks or decides to implement a corporate tax, if you have set up in a free zone which guarantees a tax holiday, then you're covered under this regime. Because the free zones effectively are, let's just call it, a department or a government entity under the same government who then will enforce or enact then corporate taxation. You see, consequently, corporate income tax is actually not payable. If you're not a branch of a foreign bank or a foreign oil company, you don't pay any corporate tax here in the UAE. There are also no withholding taxes in the UAE, not on royalties, interest, or any dividend payments, or from any licensing entities. Absolutely no withholding tax. And last but not least, there's also no personal income tax here in the UAE. So if you set up here and you live in this country, then you have no taxes here from UAE side. Again, also important, since there is no federal tax regime, there are no federal laws in place now. The residents here are also not issued with TIN number. For residents, of course, this is always interesting when you deal with FATCA, etc. declaration. where other governments that ask for a TIN number, this is just not the case. It's not issued because we don't have taxes. When we talk about the tax residency certificate, this is of course always like a big component, a big question. Is like when we talk about the tax residency certificate, this is of course used when you want to claim a benefit under a double tax treaty. I make an example, you're resident here in the UAE and you own a company in Switzerland. If the company in Switzerland is paying dividends, then the withholding tax would be 35% from the Swiss side, and you would get the 65% basically paid here to the UAE. Under the double tax treaty between Switzerland and the UAE, you can reclaim, when you can show such tax residence certificate, a portion of this withholding tax, depending on the setup, that can be up to 20%. So in fact, under the double tax treaty, when you benefit from the treaty, you can reclaim 20% from the 35% which have been collected by the Swiss government. I don't want to go into the details, just show you quick what the requirements would be. Of course, you need to have the residency visa in this country. You need to show that you actually live in this country. You need to show that you have a local bank account, at least open at least 6 months. So you need to provide the 6-month statement to the authorities here. You also need to show that you have an income here in the UAE. There can be employment, there can be dividend payments from a share certificate. You also need to show an immigration report. When you enter this country, you get assigned a UID number, which you keep for the rest of your life. So the authorities, when you enter your passport number, they know exactly on which date you entered the country, on which date, at which time, and they also know when you left the country, on which date and which time. Here again, you need to show for the last 6 months the immigration report when you have been here in the UAE. And last but not least, you need to show either a lease agreement for an apartment or a villa here, or you need to show the title deed that you own an apartment or a villa here. So in the end, you can see you need to show that you have the residency here, you need to have a local bank account, you need to have income locally, and you need to show the immigration report when you have been here, and you have to show where you actually live here in the UAE. You see on the note right now, since the tax residency matter has been shifted from the Ministry of Finance to the Federal Tax Authority at the end of last year, the authorities here, I assume also under pressure from abroad, are now more and more enforcing like the strict rules which has been agreed in one of the various double tax treaties. One of these formal requirements is that you have to be at least half of the year, so the 180 days here in the country in order to obtain such tax residency certificate. In the past, this was not really so much enforced. So if you can show I have a lease agreement, I have a personal bank account here in the UAE and have a visa here, then the authorities did not really check on the 180 days. But now, since the move has been done to the Federal Tax Authority, this has now more and more strictly been enforced. Of course, when you're a CEO and you travel a lot during non-COVID times, you of course cannot be 6 months here because you travel, you need to visit your business partners, your subsidiaries, your group, whatever. Then you have, of course, other ways how you can show that your central of vital interest is actually in the UAE, being like that your kids go to school here, that your family is residing here, or like most of your assets are in this country. So again, the 180 days is the first formal hurdle, but nonetheless, this is now very much enforced more strictly than it has been in the past. When we talk about the tax residency certificate, of course, they can also be obtained for companies. I said it before, when we look at the requirements, of course, you need to have a valid trade license here in this country. You need to show that you have a tenancy contract, so you rent actual office space here. So a business center option would not qualify that you can get the tax residency here. Then the passport and the valid visa copy and the Emirates ID of the director and the manager. Again, here you need to show that the management is actually taking place here in the UAE. And last but not least, you need to show the latest certified audit financial statements that you actually have operations. It's not just some government company here, or if that's not possible, then the 6-month company bank statements. Here again, you see it's important that the requirements are here. You need to show that you have actual physical presence here in the UAE. So you need to show that you have an office. You need to show that the manager is actually here, the resident here, so the decisions are taken here, and that you have operations. So this is again, double tax, the tax residency certificate is in order to benefit from the double tax treaties, has again, nothing, I mean, just vaguely to do with economic substance rules, which is another topic. But again, here, tax residency, in order to profit from the double tax treaties, you need to show that you have physical presence here and actually a proper setup here in the UAE. You see it, note the federal tax authorities, they of course don't issue such tax residency certificate for offshore companies, JAF, Sarak, ICC, and Dajman, and also not for an ADGM SPV, because they're not considered as being a tax resident here in the UAE. So this is just a quick background about the taxation matters and the related tax residency certificate, that you have a bit an understanding what it means to actually profit here when you set up in the UAE. When we talk about UAE residency, so that's basically the key that you can come to the UAE without any time limitation. When you come here from Europe, you can max stay 90 days before you would need to leave the country again for 3 months. When you have the residency, this is the key. You can come here and stay as long as you want. You have various types of UAE residency. One is, of course, the employment visa. If you are employed by a local company, being it Freezone or mainland company, you're allowed under the employment to have a visa to work here. Then you have various investor visas, one being if you're the shareholder of a UAE company, there are minimal requirements, of course, how much at least share capital you need to own. You can have the visa as an investor. You can also own real estate property, at least 1 million dirham. Compare with Swiss francs, it's divided by 4, is about 250,000 Swiss francs. With US dollars, it would be a bit more, maybe almost 300,000 US dollars as an investment, which of course is blocked for the time you have the visa. Then newly, at least here in Dubai, not in the other Emirates, you have the option to have a retirement visa. You need to be at least 55 years old and you must have retired. So you need to bring a letter that you actually are not working anymore. And here again, you need to show at least 1 million dirham in investment, being it a real estate investment, being it in a fixed deposit or some bonds with the government. Here we have a variety, but again, it's about investment you need to make in order to get the visa. The residency visa is not equal to the tax residency. As I said before, there are various additional requirements which are to be met. Just because you have the key to come here, like without any time limitation, does not mean that you actually are here. So first point for tax residency is the visa, but then the other additional requirements also have to be met. One of them being 180 days now being in the United Arab Emirates. As a UAE visa holder, you cannot be outside the UAE for more than 6 months. Otherwise, your visa automatically gets cancelled, because they say if you're out for more than 6 months, you don't really have an interest of having the visa here in the UAE. Again, you see the various types of visas, how you can obtain the residency here, and then again, it's very important with the latest changes also, residency does not mean also tax residency. When we talk about inheritance matter, I said it in the beginning, that the principle here in this in the Emirates is you're under the civil code, and the civil code follows the public order principles of the Sharia law. Having said that, this is the Sharia law has of course a big influence on all the family matters, being like as a Muslim, as a man, I can marry more than one woman. When you follow inheritance principles, then male heirs are better off than female heirs. So if you have a family with 2 kids, a son and a daughter, then if the father / husband passes away, then the son would get basically double of what his sister would get, and he would also get more than his mother and his wife, because from a traditional point of view, he would become the new head of family. Of course, these principles are not very familiar to Christians or Westerners. So here also the UAE has the options that you can opt out of this Sharia law. But the most famous way to do that is a non-Muslim will register with the DIFC courts. I have said it initially, the DIFC has its own courts and its own jurisdictions. So basically there, under the common law principle, a non-Muslim can opt out of the Sharia law and basically have his home law applicable to his assets here in the UAE. When I say the assets here in the UAE, we have to remember that the UAE is not a partner of the Hague Convention, the international treaty, which would recognize wills and testaments from other countries. So if I'm, as a European, have a will in Europe, the local courts, if I pass away, would not consider the will which I have done in Europe. Even if I bring all the attestations, they have no obligation or no duty under the laws here to recognize such will. So the only way to protect the assets here in the UAE is actually such a non-Muslim will. There are various options now. The DIFC one is the first option. Then you can also register such a will with Dubai courts and Abu Dhabi courts. As you can see, these are local courts, so the proceedings and the registration of the will would be in Arabic. Also, once the testator passes away, the probate then would be treated in local courts and all in Arabic. Contrary to DIFC, where the registration and the probate would all happen in English. Recent changes also again here on federal law. They have said, or the information out, the notice from the government is out, that there will be a change to the principles. So the link, in principle, even now, when you're a Christian or a Hindi or whatever, you would still fall under Sharia law if you don't have a will. So newly, it's not about the religion anymore, but it's linked to the nationality of the deceased. So if I'm a resident here, I have assets here in the UAE and I pass away, me being Christian, I would not fall under the Sharia law principles anymore, but then I, as a Swiss, the inheritance method would follow the Swiss laws. Of course, this sounds very, let's just call it exciting in a theoretic way. Of course, when you think like we have almost 200 nationalities here, the local court here, the local judge in Dubai courts, I'm not sure how familiar he actually is with the Swiss inheritance law. So again, the pushes are in the right direction, but then in a practical way, I still see a lot of issues. Just as a bracket, the same is applicable like for marriage and divorce here. Currently, the system is like that if you want to get divorced, then it's based on the common home country law from the couple. If the husband and the wife don't have the same home country, him being French and her being Italian, then because again, from the principle here, the man or the male being higher in the laws, then such divorce would follow the home country law jurisdiction, the home country laws from the husband. Here the changes again, like they intend to push there is more equality amongst the spouses. Now the changes here are then that the divorce should be conducted here in the UAE under the laws applicable at the place of marriage. So if the couple, him being Italian, she being French, got married in the Seychelles, then the divorce here would happen under Seychelles laws. Here again, a lot of changes, as you can see here in the federal laws. This, of course, to accommodate like the foreign investors, to take a bit the scary off, the fear off from like a jurisdiction and laws which are not very familiar to. So here again, the UAE really pushing to opening up and making it interesting for foreign investors. When we talk about why the UAE, why come to the UAE, why setting up in the UAE, I said it earlier, there's a zero tax regime for corporate and individual taxes. There is an extensive network of double tax treaties with more than 90 countries in place. So compared to other jurisdictions, offshore jurisdiction, this is quite high. You have the option of full repatriation of capital and profits. The UAE, the IFC and the ADGM are renowned and worldwide recognized financial hubs, them being or following common law rules and common law principles, of course, in line with other big centers like Singapore and London. You have world-class infrastructure facilities and connectivity. It's an open secret with Emirates and Etihad, the two big airlines here in the country. We know all, they connect the whole world by now. Having said also infrastructure and facilities, right now of the roughly 9.5 to 10 million residents here in the country, more than 7 million people have already been vaccinated for COVID purposes. When we look at the worldwide compared to other countries, we're right behind Israel and far ahead from the UK, the United States, and of course also Europe. You can see here the facilities which they have, the push they're doing here. It's world class, not only infrastructure, but also the overall environment the government is providing here. You have a high quality of life. You have all the major universities from the world have set up here. The Louvre from Paris has also, let's just call it a branch here in Abu Dhabi, is a world-class art, world-class companies have set up, world-class educational structures have set up here. You have a variety of private schools with all sorts of curriculum. If it's English, if it's French, if it's Italian, they've all set up their own schools. So it's world-class education. You have political stability, the liberal business environment here. It's like this is the shining pearl here in the region when we consider all the, or most of the surrounding countries having not so much of a political stability. Here, the UAE is at the forefront. Having said that, also no secret that the UAE has signed as the third Arab country the peace treaty, basically with Israel. They have now started as one of the big Arab players here to trade with Israel. Of course, this also brings a lot of stability in the region. When I say the UAE is a good platform to set up, this of course is also a good setup option for company migration. The company which has been established in one of the various offshore centers, which maybe faces like difficulties now for banking purposes or tax purposes, if such entity needs to put substance on. All the above points are of course in favor of a setup of such a migration here to the UAE. We have done that ourselves from the Seychelles, from the BVI. So this is a relatively smooth process. The company can keep its track record, can keep their agreements with business partners and clients, can keep banking relations, because as far as we have seen, when a company puts on some substance, the banks are usually happy about that. And so far, we have not seen that then the banks have closed such accounts. However, of course, this is up to banks. Just as a general recommendation, putting substance on wherever you are is usually a big plus when dealing with banks. Then last but not least, to the outlook here, I said it before, the Emirates, they have signed this treaty with Israel. Of course, Israeli tourists, Israeli investors, being it in the real estate sector, being it in the company sector, Israel being in the top player for high tech and cyber stuff is of course very attractive for the UAE when we see like this country is really pushing boundaries, being it like I say the Emirates have just landed on the Mars together with other big nations just a few months ago. They're really pushing that. In the healthcare sector, they're also attracting top-notch clinics and hospitals. So they're really pushing, and with Israel, of course, a highly tech-ized country, then it's a profit on both ends. Then last year in October, there would have been the Expo 2020. This has been postponed due to COVID, and shall now, at least it's planned, start on October 21. Having said that, the big airlines here are a big connector. They expect a lot of millions of visitors here, like not when we think of like an expo in Italy, which was mostly like school classes from Italy or from the neighboring country. Here, in fact, the UAE being a transit place will attract a lot of visitors, being it investors, being it business opportunities. So here we see like a big opportunity here for the Emirates, and also when you think about doing business here in the UAE. Again, this is like the Olympics, which shall happen in Japan this summer. It's all a bit in the stars, depending on how this COVID situation will continue. At least here, we are very much up top notch with the vaccinations. So I'm sure that like if it's somehow possible to make Expo 2020 happen, that there will be pushes to make it also happen. So this is just an outlook for the future, like what's happening here, what is the basis here. Again, referring to the legal system, we have seen a lot of pushes, a lot of openness to attract foreign investors, to take the fear away from whatever like judgments there might be from an Arab country. And we have actually seen there is a lot of influx of foreign investors who are also considering the vaccination rates now they're doing, providing first-class infrastructure. We actually want to come and set up here in the UAE, not only for corporate purposes, but also for individual purposes, setting up with family here and actually choosing the UAE as their place to be. So these were my remarks to the UAE and the business opportunity. I know it's a lot of information in a relatively short time, but this shall give you like a first impression of what the UAE can offer. And I'm of course very happy to follow up. If you have any questions, don't hesitate to drop me an email or give me a call. Happy to discuss whatever queries you might have. With these words, Luca, I'm happy to hand back the word to you.
Yeah, thank you, Michael. Thank you to all participants. In a very short time, it was a very quick overview on which would be the opportunities, not only for corporate companies, also for private persons. If there are no questions live at the moment, I can follow the message of Michael to get in contact with you directly. Michael will send you an email later on with the presentation and with the additional information, and you can get in contact directly with him and to ask him directly more information about. So thank you for joining. Have a nice evening, or I don't know which is time where you are. So thank you for joining. Thank you, Michael, and thank you, Alessandro, for technical support. Have a nice day and evening. Thank you very much.
Thank you, everyone. Stay safe and have a nice day. Bye-bye.
Thank you.